got to treat one of the guys who actually had COVID, came right back, didn't talk about it other than to say he's back and doing a good job, and that's what he is. This is on the phone is Morgan Stanley's chairman and CEO, James Gorman. James, congratulations on going through an illness and also putting up a good quarter at the same time.
Well, thank you, Jim. It's been an interesting couple of months, but I was one of the fortunate people who was not hospitalized or in serious danger, and my heart just goes out to those folks and their families and, the tremendous tragedy that so many people have gone through.
Well, let's talk about what's happening in this industry. You have worked mightily to make it so that you are asset light. You're even making a terrific acquisition of a company that is a different kind of, that's a customer-facing interface that is terrific and dovetails with absolutely no loss of clients that I can believe with you guys. And yet, at the same time, I've watched your stock trade as if it is just another bank once again. I don't know what can you do? Your characteristics, E-Trade's characteristics are very different from the cohort that you're in.
Well, I think that's that's a great observation, one I make to myself and pretty much anybody who'll listen to me many, many times a day. We think we've radically changed the profile of this company, the risk profile. I think you just saw that in the earnings. We generated, ROEs of 8.5%, ROTCs over 9%. So, really solid quarter given the environment. And, and that's before we have E-Trade. I mean, I think E-Trade just further stabilizes the organization, gives us more power in the wealth management side and brings incredible technology. So, in time, listen, the market will adjust. We just need to get through this crisis. Obviously, we came through the 2008 crisis. That was scary. This is completely different. The firm is in really strong financial health. And I think the market wants to see that, see the E-Trade deal close, which we're excited about in the fourth quarter. And then we're off to the races. So it'll come, Jim. It's just one has to be more patient than we probably all want to be.
Now, you are experienced to know when there's big downturns in the industry, the first thing that the brokerage companies do is fire a lot of people. What's your plan for this downturn?
Well, I came out publicly a few weeks ago and said we were not going to fire people this year. We think our employees have done an amazing job. We have 90% of them working from home. They're under enormous personal, stress, and with everything that's going on in the virus and with the economy. So we thought it's just the right thing to do to tell them that for this year at least, and hopefully for much longer, there will be no rifts here. We're standing by our employees. And honestly, I just got off the shareholder call. I think that's a shareholder-friendly thing to do. You want to build organizations with great cultures, great loyalties where people are proud to be associated with. And this was a no-brainer. It was a unanimous vote of the operating committee. And, obviously we get to the end of the year. Hopefully this thing is stabilized a little bit, meaning the markets, the economic environment we're in, and we won't go into a rift. We're going to be building this business.
James, it's David. You mentioned, of course, the 08-09 period, and that this is unlike anything that we've really seen. So what do you do? I mean, it's so impossible to predict the future day to day, let alone 6 months from now. What are the key things you have to be focused on then at Morgan Stanley that are must-dos, even though you don't really know what's coming?
Yeah, it's a great question, David, and good to catch up with you. Listen, the first thing is the plan has to work. We're the number one equities house in the world. We're managing, $2.5 trillion of client assets in wealth management. We're arguably number one or two in the world. We've got a very strong, respectable fixed income business with macro and credit trading all over the world, and obviously banking and asset management. The plan has to work. When clients put trades in, when clients are looking for Morgan Stanley's advice, it has to work. And, if you'd told me 3 months ago we could have 90% of employees out of the office and be functioning with the volumes that we've had, and we had our 10 biggest days on record, consecutive 10 biggest days, and I think they were each more than 50% bigger than our last biggest day, I would have said that's the probability of that being pulled off is close to zero, but it happened. So number one, focus on the plant, ops and tech, which we're doing. Number two, obviously risk. We're all over it, every position, every client situation. On the retail side, the margin book has held up, the mortgage book unbelievably well. we're careful. We came into this conservative. Third thing is you manage your liquidity, which we've done. And we also went to the market in the last couple of weeks, did some funding, and then fourthly, just make sure the organization is talking to each other. We're in the middle of a war now, and our operating committee has been doing daily calls. We're constantly on the phone with the board. We're very connected, and I think the beauty is almost all of this team were together in very different jobs and more junior roles, most of them, back in '08. So we've had 12 years of working together as an operating committee, and there's great, great communication between that team.
James, I again, back to this point of we can't predict exactly what the numbers are going to look like or what the future will look like, but we could see a 30% down GDP number. You mentioned that in the call. We could also see an economy that is slow to get back on its feet. Is that what you're planning for? There are those who still believe that we're going to have a V. Are you expecting that as a possibility, or are you more in the camp that it's going to be a U?
Listen, we all love to wish and to hope. I wish, I hope for a V. Do I expect a V? No, I don't. I mean, you can't have this kind of dislocation and expect people to bounce immediately. I mean, I'm in New York City. I know you guys are, or you're in the region here in New Jersey, New York. I mean, it's shut down. This is not going to turn on a dime. We're not going to get to June 1 or whatever, and suddenly everybody's back in the subways and back on the buses. It's going to take time. So by definition, I think we've got, to get consumers back, to get small businesses back, to get everybody feeling like the world is stable again, that's going to take months. That's not going to take days. So your best case is some sort of U recovery. And I think, if I were a betting man, it's somewhere between a U and I guess an L. I think, it's through the end of next year. We're going to be working through this global recession.
James, an excellent piece put out by your firm today, and it's called Rising Dividend Risk, How Stocks React to a Cut. It's your quantitative equity, which is so good. And this morning, the New York Times, as banks pay dividends, the Fed faces questions, which includes the Janet Yellen quote, which questions why banks should be able to pay dividends. When I read these two things, I think is one of the reasons why people are worried about all the banks, including Morgan Stanley, is it's just in the air that you may have to suspend, cancel your dividend, even if, particularly in your case, because of the way you run an asset-light book, it would make no sense.
Yeah, Jim, it's obviously this has been debated everywhere, and sort of what's the right thing to do by society, what's the right thing to do by your shareholders, what's the right thing to do for stability of the system. I'm talking about the large 8 banks in this country under the umbrella of the Financial Services Forum, we voluntarily shut down our buybacks. And we did that not because we had capital issues. We just thought it was the right thing to do, to use our balance sheets and our capital basis to support clients in need during this period of time. That was 70% of capital distributions. Dividends are 30%. Our quarterly dividend is 35 cents a quarter. We just hit, in a very, very, very difficult environment, $1. So we've done almost 3/4 of dividends just in this quarter. So there is no capital argument as to why banks should shut down their dividends. There's no sort of, is it the right thing to do, not the right thing to do? It's a balance here in terms of shareholders. We've got millions of shareholders across this country who own these large bank stocks. They depend upon that dividend for income. This is the piece that's being lost in the discussion. It doesn't make that much difference to the banks, but to the individual shareholders, that income coming in this time when many people's income is completely dried up, I think that's essential. I don't understand the argument why you would stop that income simply because you can.
Yeah.
If you needed to because the banks were capital short, that'd be different, but they're not. They're not remotely close to it.
It is incredible how people in the government seem to forget that there's no money for, if you're retired or you're elderly, fixed income, the only way you can get any is from banks like yours. Now, I want to talk about E-Trade because you know how excited I told you when this deal came through. I sense there's a whole new group of younger people, and they are interested in stocks. They saw what happened with Alphabet. They saw what happened with Tesla. They understood that if they bought Amazon, they'd do better than index fund. What is the book of business these younger people are doing, and why are you so drawn to having them?
Well, listen, I'll talk about E-Trade at a couple of different levels. By the way, they've held up unbelievably well during this crisis, Jim. Their plant, which is where I started this call of what I focused on with David, their plant has held up great. They're a terrific, talented management team, and we're really excited to have them join us in the fourth quarter. But listen, they've also got one of the country's biggest stock plan businesses, and so do we. That combined business will have almost $600 billion in plans. People accumulate wealth, through their workplace, overwhelmingly. So this gives us access to that at a scale that we weren't even barely in a couple of years ago before we bought Solium. Number two, there is this huge demographic of millennials and next generation that are obviously dealing their financial services, whether it's through credit or payments or for investments or research. They're doing it all digitally. And we need world-class digital capability. These guys bring us that. And thirdly, for our existing clients, and particularly in a time like now when everybody's dealing remotely, it's a huge positive to have to our platform. E-Trade also has its own unique client segments. It has a heavy trading segment, which we welcome. We have that segment, obviously, in our institutional business. So, somebody asked me the other day how I felt about the deal now a couple of months on with this crisis. I feel more strongly about this deal than the day we did it. We bought it stock for stock. The company is a great company. It's performed under massive stress. And honestly, it augments our technology platform in a way that would take us years to do.
Hey, James, I doubt you're going to tell us a lot about the phone call with the White House yesterday, but the reporting suggests that testing was a big topic. Is there any color on that you can share? And do you envision scenarios in which large companies like your own sort of bring testing, employee testing in-house as a way to manage the employees that are coming back into the office?
Hey, Carl, good to see you. And thanks you guys for having us on, by the way. Testing, I won't talk about it. It wasn't open to the media, so it's not my job. But testing was clearly something that many of the CEOs are focused on. It's interesting. I was traveling internationally a few weeks before this whole crisis occurred. It was just starting up, and there were some companies that were doing temperature checks on people coming into the building. Back then, this was, beginning of March. So, listen, I think, the ideal is you'd do temperature checks. You'd have people who've been through the virus like I have who are now, we believe, immune, coming back to work. You'd have people get the antibody tests. Whether you do it at the place of work doesn't feel to me like the right way to do it. It just, I think this is something that should be done through the healthcare system. But I think over time, employees and visitors to buildings are going to want to know what the people sitting next to them have been through or not been through and what their state of health is. I think that's a reasonable expectation, and particularly for those who've got elderly parents or people with immune issues in their families at home, that's a reasonable thing to expect. So, yes, testing both before, testing to make sure you've got it, and then testing to make sure you've got rid of it are clearly top priorities from my perspective.
James, thank you so much for coming on. And I'm so glad that you're safe and doing well. That's James Corbin, CEO of Morgan Stanley, with a good quarter in a very tough group. Great to talk to you.